Loving the Smart Property Investment Show? Then you're going to love tuning in every Monday to the Scouting Australia podcast, hosted by Sam Gordon, Smart Property Investment Show's most downloaded guest.
That always just triggers in my mind. Like I'm always wanting to look after people because of what happened to me there.
What are you waiting for? Listen to the pros at the Scouting Australia podcast, now on all your streaming platforms, and get educated.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant, host of the Smart Property Investment Show. Hope you're well. Reporting after the interest rate announcement of the first Tuesday in April, and I'm sure everyone knows now. Well, if you haven't been reading the news or smartpropertyinvestment.com.au, that the Reserve Bank of Australia has decided to keep interest rates on hold. I sort of was chatting about it running up to it. I was 50-50 on it. My sort of deep sentiment was it would probably stay on hold. They would probably pause interest rate hikes for the month of April, but there was still a little bit of me sort of thinking, you know what, maybe they'll just make sure of it and hit it again another 25 basis points. But I think, and right now as we speak, the Reserve Bank Governor is fronting National Press Club. One of our journos or editors is down there is going to be able to ask a question to them, try and get some sense on property markets. But I just had this thought that they just give it one more go and ensure that the effect and the impact they want to take place has taken place. Now, I reckon they're just trying to get a bit of breathing space. At the moment, there's been consecutive rate rises. We've been chatting about on the Smart Property Investment Show now for 10, 11 months, really waiting to see what the cause and effect is of that. And I think that now is starting to come through. You'll see that coming out in the RBA minutes notes that will be released shortly, or what the governor says over the next hour or so when he fronts the press club. But good news for people with mortgages. I note this week, ABS data come out saying the highest rate of refinances for owner-occupier loans in the history of however long they've been mapping this stuff. I don't know how long, which gives a sense of people have been really looking at their mortgages, thinking about their mortgages, and looking to ensure that they have the most competitive rate possible based on their circumstances and situations. Interest rates have gone up. People pay more for their mortgages. Hopefully we're at a terminal rate now. It won't go up any higher. It may do. I reckon potentially maybe another hike over the next couple of months. Who knows? But you already see people, economists and sort of smart people that work in bond markets, which is sort of outside of my skill set, are really starting to price in cheaper fixed rates. You're starting to see that coming through, and that's a real indicator that we're sort of at the top of this cycle. So that's good. If you haven't looked at your mortgages for a little while, probably bad. You might get a rude shock. That's why we do a regular update with our friends over at Finni Mortgages, who really got their finger on the pulse of mortgage financing at any given time, up to date on changes in the market. And we have a special guest this time. It's not Eva Loisance, who's my regular participant on this. She does join me in the studio, but we have someone joining us who can give us a bit of a different lens on how stuff happens. And I thought about this because it's something that I'm sort of working through right now with the team I'm using over at Finni Mortgages, leveraging a private bank. Sara, Shome joins us. We're going to have a chat about broking and private banking, because sometimes people think the two don't go together. It's like oil and water. Well, guess what? They do mix, and they mix pretty well if you get it right. How you going, gang? Good to see you.
Yeah, good to see you. Thanks for having us. Thank you.
Yeah, it's good. And Sara, this is your first ever podcast?
It is. Thank you for having me.
How nervous are you?
Oh, probably
out of
9.
10. Give me a 10.
Out of 9.
Are you reckon at a 9 for nerves?
Yeah.
Where were you, Eva, on your first podcast when you first kicked off? Do you reckon at a sort of, I've never done this before and therefore my nerve levels are high?
Oh, yeah, 11 too.
Where are you now?
No, it's more like a conversation. We've had really good feedback from people who have, listened to the show and came through. So it definitely gives us a bit of confidence and can see that we're doing the right thing by educating people in finance. So yeah, it's been good. It's been really good.
Yeah, I do enjoy it, and I enjoy our regular catch up. We've covered lots of stuff. Last time we spoke, we sort of debunked a few myths in, by memory, SMSF lending, and the fact that you can get an offset inside of a SMSF, which a lot of people don't think you can, and not a lot of people do it. But it's worth having a look at. If you are investing in property inside of your SMSF, you might not be getting the best stuff you can do. I spoke to a friend of mine. I think they ended up chatting with your team, Eva, when he was paying an exorbitant amount on his residential property inside of his self-managed super fund. I went, mate, you can get a much cheaper rate than that. It changed a lot, and then it come back. What's just? I know it's off topic, Eva, but what should you be expecting? Sort of residential property with a good LVR level inside of your super fund?
Yeah, we can see rates from 6.2 at the moment, and most people would be at 7, close to 8%. So it's definitely worth refinancing, especially if you haven't for a few years. And if your LVR is under 70, 60% would be a really sweet spot to start with. But yeah, it's worth checking anyway. Even at 80%, we probably can do better if you haven't been refinancing for a while.
You reckon at 80%, could you still get an interest rate that starts with a 6?
Yeah, just under, yeah.
Yep. Pretty good. Okay, well, there you go. Hot tip. What sort of rates are you seeing outside of super at the moment, like for PAYG, so people that have a job and get a regular salary, not self-employed, investment finance, variable rate, interest only? What should you be expecting to see at the moment, Eva?
Depending on the loan size, we probably would start around 5.6, 5.7, and all the way up to 6 plus.
Yeah, I think I'm paying some 6 plus stuff, hence the reason why I'm getting your team to refinance some of our stuff at the moment. And we'll get into that at a point in time. And just look, that's really general numbers. We're not sort of, saying, hey, you should expect to get this. So everyone's circumstance is different. And apologies, but you've got to do these disclaimer stuff because people go, I heard on the Smart Property Investment Show that you can get 6 point. Well, yeah, maybe if you're a certain type of person and you earn a certain amount of money and you have so much equity and you've got everyone is absolutely different. So this is the point that you need to speak to your mortgage broker because they can actually understand what makes you unique and then match you with the most appropriate finance. And I saw some numbers that also come out this week that there's heaps of mortgage brokers out there as well. There's more mortgage brokers than any point in time. So obviously what mortgage brokers do is resonating. I don't want it to be sort of, I love mortgage broker day, but as you can tell, I'm pretty pro broker. So that's why I use the good folk over at Finni mortgages for my stuff. And I've said it before, I really believe in what these guys do. Hence the reason why I made an investment in this company. They're doing some great stuff. But let's chat about private banking and how they interface with brokers. And I don't want to give too much suspense, but just go to a quick break beforehand. We'll be back in a moment.
This year might just be the right year to invest in property. But before you jump in, do you have a low-rate investment loan pre-approved? It might be the right time to invest, but the wrong loan could dent your prospects for achieving the maximum return. Are you armed with the best finance at the sharpest rate? Find out with Finni. Call us now on 1300 002 023 and find out what you could save. Or visit our website, finni.com.au to book an appointment.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show. I'm with Eva Loisance and a colleague of hers at Finni Mortgages, Sara Shome, trying to get into broking and private banking. Now, Sara, you used to work around private banking. Is that right?
I was a private client manager, which is one of the relationship managers at NAB Private.
Okay. And NAB Private's a good bank. We know the folk over there. They do some good work. What's it like working with people who have a private banker? Are they nice or are they normally a bit harder to work with?
Oh, I think you can get that in any category.
Yeah.
No, to be honest, there are clients that look me up over the years and friendships that I've held through that I still talk to this day. And really at the end of the day, it doesn't matter what segment you're in. It's all about the relationship that you can pull out of that. But the clients, I would say, majority are very good.
And I would imagine most private bank clients are really, really busy and time poor and have conflicting priorities and might not be as organised as what they should be. Does that sound right?
That does sound right, to be honest.
And sometimes the traits of successful people who need a private banker, but
yes,
no doubt it's like herding cats.
Yes, it can be like herding cats is probably the best way to put it. But no, a lot of them were time poor. Majority of my clients were medical, so, surgeons, doctors, anaesthetists, and so on. You've got entrepreneurs, you had boards or directors on boards, and so on. So the similar people. Then you also had people that the wealth had been passed down as well over the years. So different ranges of people, different types of, people in relation to where they are in life as well, which were good. So it really depends on the person. I think you have to be successful in that, you have to be able to adapt quickly. You could have a conversation with someone that wants to do everything and be involved in it. So you might have to educate the client and so on. And then you may hang up that phone and then pick it up again. And then it might be someone that just wants you to handle it all. So you need to be able to adapt to that quickly and know your client. And really at the end of the day, that's what it's all about, is knowing your client.
And maybe we should get some private bankers on to sort of have a yarn about this as well, to give a sort of two sides to this discussion. But banks, which have a private banking arm, typically like sort of private banking clients because they're probably stickier than more transactional banking. Is that fair?
Yeah. It's a very fair comment. Usually when you see the private banking clients, they're so well set up, whether it be from everyday banking through to their lending and so on, that it's quite sticky in the bank. And then you've got different types of areas that you can offer them services in as well, that not just from a lending point of view, but also through to investment. So whether it would be through wealth creation, at the time we're using JB Weir, I believe they still do, or maybe it was, you've got wholesale investment markets as well that we would offer assistance on with the client.
And, banks like, because it's a whole notion of share a wallet. So, if you've got a greater understanding, appreciation for a client's holistic wealth, they can look to service them in other ways. And I sort of get that. Most of my relationship with private banks around mortgage finance. And it's this sort of misnomer, Sarah, that private banks don't like working with brokers. They just want to do it themselves directly. And I guess disintermediate, which is a technical term, but get the broker out of the way so they can do it direct. That's not true, is it?
No, that's not true at all. The client belongs to the broker at the end of the day, and the benefit to the client to have both a private banker and a broker is that as a private banker, there may be times where I was limited to, and I can recall plenty of instances with my own clients where I understood completely what they wanted to do, but I may not be able to assist. And I do recall a client that needed a cash injection into the business, and I really did try to assist, but unfortunately on paper we couldn't demonstrate it. The benefit of being a broker is that I no longer have to say that to my clients, is that I can't assist. Now at least I have the options to be able to find them the solution, as opposed to, I'm really sorry, I know exactly what you want to do, but I can't help you. So if you've got both, then you may go down the preferred path. If you were with NAB, for example, then you may stick with NAB. But then if NAB were not able to assist, or you ran the scenario past them and they couldn't assist, then that, as a broker, you could step it up and say, okay, now I need to find a lender that can help you.
It's okay to have both as well. You can still maintain your relationship with the private bank. You just, for the purpose of that outcome, you just go somewhere else and sort it out, which is very client focused. So that's where a broker can really still act on your behalf and in some ways keep the banks honest, right?
Absolutely. So there's plenty of times where as a broker, you may be able to find the client a significant saving. If you're talking of lending of that level, then there could be significant savings elsewhere. But, the benefit of the private bank working with the brokers is that they can also work referrals both ways and things. So it can become quite a beneficial relationship between the two.
And are all banks created equal when it comes to their aptitude and attitude for brokers being part of a sort of transactionary or a strategic relationship with a client, or some of them do it better than others? And I don't want to beat up banks on this. I like banks. Banks are cool.
Yeah,
particularly if they make mortgage financing easy.
Yeah, well, that's true.
Yeah.
I think across the board, banks are pretty much similar in their attitude to brokers and third-party channel. As a private banker, you are also looking for ways to bring in clients that qualified, and it can be a difficult sector to place to qualify the client. So the more eyes you've got out there, the better to help you.
And it sounds all very glamorous having a private bank, and they've all got different thresholds. And I know some of them, like, they go, well, you're not a private client yet, but you're an emerging client or something. I don't know what they all call it, all different things, right? When do you typically end up with inside of a private bank of an institution? Like, what's, just to give some sense to our listeners, and some of them might have massive portfolios and some of them might be starting out. When would you normally fall into the bucket of being a private client?
To qualify for private banking, you need to have $2 to $3 million in investable assets. So that may be cash or bonds and so on. But I also feel that when you're actually in private banking, you are also looking at clients with significant lending levels. So it may be lending in a similar sort of level of the $2 to $3 million mark. I do believe that there are different levels to private bank, and to at least get your foot in the door, if you had, say, $2-3 million in lending, then you would qualify for private bank.
Okay, so if you're a property investor with a large portfolio and $5 million in debt, like you'd be in the realm of a private banking client.
Yes, I'm very certain that you would find private bankers that were very interested in that.
Interesting you say that, Sarah, because most investors I know don't want all their eggs in one basket, right? They don't want to have all their debt with one lender because they feel as though they might not be getting the advantages of the competitiveness of having a number of different lenders competing for their business, this, that, and the other. So how do you weigh that up? The benefits of having a lot of your borrowings, a lot of your relationship with one specific lender on the basis that they will look after you, versus don't give them everything because you want to keep them a bit honest.
That's a tough call, to be honest, and it's going to come down to the individual and how they would rather proceed. I feel that there are benefits to being with the one lender, in the sense that there may be, for example, with NAB, we would have the portfolio package, and then that would allow you to have certain structures that would not necessarily be available to you in the retail space. Then there are individuals that do prefer to spread their risk across the lenders, in which then that's, I guess, as a broker, you would be able to mitigate out for the client and spread their risk.
What do you see, Eva, when you're dealing with people who have those sort of private bank relationships? So they like to be a bit sort of fluid and nimble, and sometimes there's pros and cons, for example, with cross-collateralizing assets, but no doubt private banks probably like that, right?
Yeah, I do see most private bankers, they would try to get the whole portfolio, I guess, and that's fair. I think once we can explain to the client that we are not going to cross their properties, and that eventually they could leave or sell or spread their portfolio in the future anyway, they sort of feel more comfortable with this. But as Sarah said earlier as well, to qualify for private banking, you might need a minimum threshold of lending and sometimes of income as well, which means to get a foot into private banking, you might need to put everything with one bank to start with, and then you might need to refinance later on or do more lending later on with a different bank.
I did find as well, a lot of my clients when I was in private, they were very private people, ironically given the name, but they didn't want a lot of people having access to their information. So in my experience, most of the private banking clients wanted to deal with one lender.
And I sort of get that, and I imagine if you get people with sort of certain public profiles, whether they're politicians or celebrities or whatever else, they want to keep things pretty tight, and they could probably do that inside of a private banking relationship. And again, it's horses for courses.
It is.
And I don't even know what percentage of bank clients are private clients. I reckon it's probably pretty small.
It's actually about 1%.
It's only 1%, is it?
Well, that's what I remember was the top 1% of clients. But I remember a lot of them being very funny because the relationships that you develop are very deep. You know the kids, you know the dog, you know everything there is to know about them. They don't want to be developing those relationships with too many people.
Oh, I get that. I completely appreciate it. And again, it comes down to, the relationship that you want and why you want a relationship with a bank. Now, a lot of people, we're talking about mortgage finance. There's a lot of people with private bank relationships who don't need mortgages. They use private banks for deploying their capital and their assets, investment vehicles, asset classes that they invest in order to generate a return on, whether it's for the immediacy of wealth creation now or long-term generational wealth. And I know a lot of people have private banking relationships on the basis of continuity and protection of wealth. There are private banks out there who have multiple generations of clients who stay with the bank and stick with the bank, and there's a confidence around that. But the private bank is measured on their ability to generate the outcomes for the client, and it's very visible and very tangible. And some people aren't looking to set the world on fire; they're just trying to retain their wealth and protect their wealth. Whereas more ambitious people, depending on where they are in their life cycle, are quite hungry. It's just how you choose to approach your relationship with your private bank. To do that, how does it work? So if you've got a particular client, Sarah, and they've got a considerable amount of debt and you're looking to refinance them, would you say, I think this feels more like a private bank type relationship? So do you have relationships with private banks that say, hey, there's someone over here that probably should be, a private bank client? How does that work?
Yes. So if we have a client that we feel would fit the private banking criteria, we would have that conversation with the client first. If they are happy to proceed, then we would approach all of the private banks to make sure that we can get the client the best deal. And then it comes down to the same sort of broking setup that we do for our average loan. And the process for that would be no different. We're trying to fit the most amount of boxes that we can, so we make sure that the client is best set up for not just now, but also in the future.
And are most people pretty responsive to chatting with a private bank if they sort of meet the thresholds?
I found it to be 50-50 now that I'm in broking. When I was in private, I feel it was obviously a lot higher. But now that I'm in broking, I have found that some clients want to just deal with us as the broker, and that they get that relationship from us as the broker, and they don't need to be going into private bank to get that. And then there are some that like the grandeur of private banking, and they want to be part of that and would actively seek that out. So I think it comes down to the individual for that one.
And do you get better deals with a private bank, or they just look at things differently?
Both.
Okay.
Both. They can give you quite good deals, and that's going to come down to what type of products that the bank is offering under private. You do have access to a different type of structure under private bank. And then you've got private banking policies so that they understand complex tax structures and trusts and all those sorts of things that, maybe in in retail lending might not necessarily work, that you can get a credit manager that will look outside the box.
Yeah, and for a lot of people, particularly self-employed people, that's quite a practical outcome. It means that they can move with more authority and rigor to get stuff done. I know a lot of sort of private banks will sort of go, okay, look, I can lend you this much money. Here you go. You work out how you deploy it. So they expect a certain degree of sophistication from the client that they are happy to take control of their own financial future without sort of relying. You see it all the time of people on four corners or today tonight going, oh, this bank gave me this much money and I should never have got that much money. It's their fault. It's not their fault. It's the bank's fault for lending the money. It's not the the borrower's fault for taking on too much or overstating their ability to service debt. So it's give and take, right, with a private bank. They expect you to be a lot more responsible and accountable and sophisticated in your ability to manage money, right?
Yeah, absolutely. I don't think my story or my warning to any of my clients when we're talking about borrowing capacity, I always say to them, we don't want Tracy Grimshaw. So, it's having that conversation with the client to make sure that they're not, that they're managing it directly and not overextending themselves.
Yeah. So the sort of that safety net is a little bit removed to go private. But again, we're talking about mortgage debt here. Private banks do a whole lot more than just, the mortgage financing side of things. Often what happens is that they, for a private wealth client, they'll have your principal place of residence, they'll finance that, and they'll sort of know about other stuff that you're doing. But, they don't necessarily always go, hey, buy more investment property. They'll be like, have you thought about all these other things here?
Absolutely. It's all about diversification. So not just in mortgage or the mortgage residential space. Then you'd be looking at wealth creation. So whether that be, for your future generational wealth, but then you've also got investments as well. So there would be a lot of investments that would be offered, IPOs and hybrids and so on, that would be offered only through private bank. We would be told the second that it opened, we would all get on the phones, offer it out, and then it would shut within only a matter of maybe an hour, 2 hours. So those things are only available to our private clients at the time.
Yeah, cool. Well, I'm learning a lot out of this. Let's go to a quick break. When we come back, let's interrogate some of these mortgage rates in private banks back in a moment.
Loving the Smart Property Investment Show? Then you're going to love tuning in every Monday to the Scouting Australia podcast, hosted by Sam Gordon, one of SPI's most trusted buyers agents.
Welcome to another episode of the Scouting Australia podcast, powered by Australian Property Scout Buyers Agency. I'm your host, Sammy Gordon.
What are you waiting for? Listen to the pros now on all your podcast platforms.
Welcome back, everyone. Phil Tarrant from Smart Property Investment with Eva and Sara, the crew over at Finni Mortgages. Eva, have you noticed people on the blower, or that's an Australian term, on the telephone? What's the French colloquial term for the telephone? Do you have one?
Telephone.
What's that? Telephone.
Telephone, same thing.
Not the blower. Are people already on the phone going, oh, interest rates are on hold, can you get me a new mortgage? Is that the end of it? Are we finished? Is that happening, guys?
Yeah, actually, I got a few calls yesterday about, so that helps me to get another property, or I can refinance now. No, it's not that easy, but I think it would ease definitely the pain for a lot of people, at least, of not having to find, again, more money to pay the mortgage. So, yeah, definitely a bit of a breather there.
And hopefully everyone's pause for breath continues, and there's no more interest rate hikes. I don't know anyone that wants more interest rate hikes, except for maybe the banks, because it's a good way for them to earn a few bucks. But that said, if you've got cash kicking around, they've got some, you want to keep it liquid, they've got some pretty good high interest savings account rates at the moment, probably not as high as having your money in an offset. If you do have cash, Eva, and you do have a mortgage, you're not having it at offset, you'd probably want to look at that, right? Is that something easy to add to a current loan facility?
Yeah, most of them you can. If you've got a fixed rate, that's a bit more tricky. And a lot of people would have fixed their loan the last few years on a low fixed rate. So that's you can't add an offset to this. But most people that would have a variable product, they can add an offset to it. Yes.
And sort of get tactical for a moment, sort of fixed versus variable. So this is like, do you have a floating interest rate or do you have a guaranteed interest rate is the thing. And I mentioned at the top of it, they're starting to sort of stabilise fixed rates and sometimes being a little bit cheaper than variable rates, which gives some indication of where the market's going. Would you be fixing at the moment? When would you be thinking about fixing your mortgage, Eva?
I've actually had a client last week where we fixed all his mortgages. He's an investor. He doesn't have any owner-occupier debt. And it feels like, he's got to the point where he couldn't really afford any more rate rises. So we fixed it on quite a good rate with Macquarie, where the fixed rate is actually lower than the current variable. So it definitely is a good option right now. He only fixed it for a year just to see how it's going. So for some people, it's definitely a good option. However, I guess the economical forecast is that the rates might go down by the end of the year. So
yeah, but look, how quickly do the banks pass on the interest rate?
a lot quicker. Yeah, a lot less quicker than when it goes
Yeah, it's
up.
like pulling teeth. They're happy to ratchet it up, and they're quick on the go to try and lift your rates when they're Reserve Bank, but they don't necessarily come back as fast. So again, you'll see a spate of refinancing when that takes place for those lenders that don't pass on those cuts. If and when they come through, it's when look, I can give you a hot tip: rates will come down at a point in time. There's another hot tip: they will go up again. When it happens, who knows? That's just the nature of mortgages. So you need to be reactive and responsive in dealing with your broker to make sure you play that game. Look, it may work for some people to do 1 year fixed and then recalibrate in a year's time and see what's going on with interest rates. You might win some, you might lose some. Who knows? Again, it's horses for courses. It's different for absolutely everyone around it. But get connected. Now, Sarah, do you prefer broking or private banking?
Broking. I miss my clients. I really do. But I do prefer broking because I do not have to say no as often as I did. So that's always a positive.
Yeah, that's cool. And outside of that, do you sort of get a lot of satisfaction seeing, because you mainly deal with investors, or you also do a lot of owner occupier stuff?
Under broking
under broking, yeah.
Under broking, we have a lot of investors, but we also have a lot of owner occupiers, a lot of new first home buyers. Different people at different stages. And I do think that I enjoy that more, going through the excitement with a first home buyer through to a final home for somebody who's downsizing, and all the in between. Maybe it's that they're having families or raising families and so on. I enjoy the journey. And for me, the big sell's always been the relationship.
Yeah, well, I've really learned a lot. And for a lot of people, private banking might not be right for them right now. They might sort of meet their thresholds, or they might not want to do it. I think we've sort of covered sort of pros and cons around whether or not you go down the private bank route with your broker. Brokers are only going to be even more important as banking changes. Bank branches are closing all over the place. So in many ways, the broker is a great originator of new business for private banks. They're on the front line working directly with the clients. And, if your broker does suggest maybe have a chat with some private bankers, it'd be well worth considering it. They may provide an option which is right for you. They might help you with sort of longer term continuity of wealth creation. And I'll get some private bankers on. Maybe I'll give them a hard time. I like giving bankers a hard time, but by and large, they're good. They're outcomes orientated, and we should definitely get that inside view as well. What to look out for when you are dealing with a private bank. It's not all bells and whistles, but hopefully it's a good relationship if you get on that pathway. Guys, thanks for coming on today for a chat. Sarah, first time on a podcast. How was it? Good?
It was good. Thank you.
Easier than you thought?
Much
so
easier.
Not 9 out of 10. How are you finishing? Good 3?
Now I'm like a 1.
A 1.
Yeah. Now it's nothing.
No doubt it's like when you start something new, like a relationship with a private bank, you might start at a 9 to start with, but no doubt they would want you to be comfortable in the relationship as well. So they'd be looking for the same outcomes.
That's exactly correct.
There you go. I sound like a spouting board for private banks. So something's changed. This is no good. But Eva, good to see you again. Thank you. What do you reckon next time we catch up? We've covered a lot of different stuff. What's next for us in this sort of series of discussion around mortgages?
Yeah, so next time I'm actually going to bring in Rebecca with me, and I think she's going to touch on self-employed lending, which can be quite complex as well, and she just loves doing that. So I think she would be the best person to discuss options and how we can read financials and how different banks might read your financials a different way and have different options for you.
That's the skills. It sounds like you got you got a really good, strong team of female brokers there at Finni.
Yes.
It's good. I like it. Yes. Very, very good.
We're still looking for brokers, though. We're still looking for brokers. So
that's right. Last time we spoke, you said you're on the scout for some good new brokers. How'd you go? People applying? You finding anyone good?
Yeah, look, we've had a few coming through, but I think, as you said, maybe we're happy to also have some males on board. So don't be scared of us.
don't be scared, guys. You know, that's Finni Mortgages could be a great home for you. But I'm getting a greater sense, and I think our listeners are around the caliber of the crew you have over there. You've got obviously someone like Sara with private banking experience. You're chatting about Rebecca, who we'll meet next time around. Specializes in self-employed. So there is a diversity of talent that you have there that can largely cater for most. So you guys do commercial stuff? Yep. Okay with commercial. Commercial's good. Yeah. Okay. There's lots of nodding. Everyone.
We do focus on commercial lending as well. That's can be coming. Yeah.
Okay. Cool. If people want to contact you guys, how do they do it?
So the best way would be to go on our website, finni.com.au, and there is like a page there where you can send your info and we'll be in touch.
How do you spell Finni?
Finni.
There you go. Finni.com.au. All right. Thanks for joining us. Great to see you. Nice to meet you on the podcast, Sara. Remember to check out smartpropertyinvestment.com.au. Social media, Smart Property HQ is where you find us. Lots going on at the moment. We're covering this interest rate stuff. We'll have some more info, see what the Reserve Bank governor says today when he fronts the National Press Club. Hopefully some insights on what it means for property values. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you looking for a new challenge that combines your existing skills with the exciting world of mortgage broking? Well, listen up, because we've got the perfect opportunity for you. Introducing the Advisors New Broker Academy 2023, a free event designed for professionals just like you who want to learn how to become a trusted broker for their clients. Coming to Brisbane, Melbourne and Sydney in June, you'll learn from industry specialists and gain crucial industry insights and intelligence to become a go-to broker. You'll also have the opportunity to network with brokers at all levels and gain a competitive edge in the marketplace. Register now for free at newbrokeracademy.com.au and join the top brokers of tomorrow.